What's up, everybody? Happy Monday. Happy July 4th. Hope everyone's having a good day. Still coming to you with a new episode. Got a lot to cover in the markets today, including some semi-volatile price movement as we've seen lately, and more importantly, where the price is going to go this week, this month. We'll get into that. Also, an update on the Bitfinex hackers. Bloomberg put out a good piece a few days ago. It shed a little more light on how they got caught. And the one specific, very small mistake they made that ended up getting them caught, wait till you hear what that is. Plus, $70 million of the Bitfinex hack money approximately is still missing. You won't believe where they think that money might be. So sit tight. Don't forget to hit the like and subscribe button. Follow me on Twitter at BenCryptoShow, and let's begin. Market action at 19,500. We've been seeing a lot of this lately. Last week, again, mid-late last week, a lot of people thought that might be another capitulation event, whatever you want to call it, a nuke event. It didn't quite happen. Prices were seesawing. Pre-holiday action, we see that a lot. Now, on the holiday, prices usually don't really do too much. So on Christmas, on Thanksgiving, on July 4th, the day before, not too much, but 3 to 4 days before, in the week before, when people are looking at their calendars and thinking, okay, do I need to, sell some crypto now, withdraw my money here? If I need to do a bank transfer, bank's going to be closed. Those are the thought process that go through people's heads in the days before holidays, and why there's a lot of volatile price action. But now that we got through that, there's not going to be any dump right now, today, tomorrow, yesterday, but where the price is going in the future. So July and August are actually pretty good months for crypto. They're flat or up months for the most part. A lot of people are just on vacation. There's not as much attention on the crypto market, and really, honestly, the crypto market moves the most when there's just not a lot of attention on it, especially in the bear market. You don't want a lot of eyes on it. So let's look at the last two Julys. This is the last one in 2021. So it looked like it finished up around 20% approximately. Start of the month to end of the month. Went down a little in the first few weeks to finish strong. 2020 July, exact same thing. Looks like it went down just a tiny bit in the first 2 weeks, and then it looks like the last week finished strong again. Went up maybe 20 to 30%, I'm just guessing, start of the month to end of the month. So July is pretty good, and for whatever reason, the last week of July always seems to be a pretty good month, and the first couple weeks, slight decreases, nothing major, mostly flat action. August kind of looks the same, mostly flat action, so this could bode well, but then again, when there's a nuke, it's usually a hybrid of different macro factors that happen at once. Generally, some are coincidentally, some are pre-planned, but when 2 or 3 of them happen at once, that's what causes the nuke event, like when we saw Consensus, and then the fact that Consensus was the last conference in the conference schedule, and then the interest rate hike announcement happening the day before Consensus. That hybrid of like 3 different macro variables right there, that's what caused the last nuke, the big nuke from 30 to 21, 22. So let's look at the July calendar and see what's the macro schedule here, what could maybe cause a nuke in combination with other stuff. So we have the job report data, unemployment data coming out on Friday. That usually doesn't have too much of an effect on any of the markets. We have the CPI numbers coming out on next week, July 13th, next Wednesday. So those, again, don't have too much of an effect, a little bit more than the jobs data, but not quite that much. But the big one, which has had an effect, is the interest rate data. I wrote inflation data. It's really the interest rate data, and what are the quarterly interest rates going to be? What's the hike going to be? So that's going to be announced on July 26th, and then usually we get a prediction announcement, a prediction of the exact amount, the number of basis points that the Fed is going to raise interest rates. We usually get that about 3 to 4 days beforehand, so I think Friday, July 22nd, that's the day to watch, because they're not going to release the prediction data on the weekend. So they're probably going to release it on the Friday before the weekend, which is July 26th. That's exactly what happened during Consensus. 5 days before, the Friday before Consensus, that's when the prediction numbers came out. And we all know that weekends do have lower trading volumes than weekdays, which is always dangerous in a volatile market like this. So that's the third week of July, Thursday, Friday, Saturday, 21st, 22nd, 23rd. That's a time to watch for. On the other hand, just like in the last few months, I think the last week, the last 5 days, I'd be pretty bullish on, frankly. So we all know the day that the interest rate announcement happens, that's actually a bullish day, even though the headlines are like, oh, Fed raised the interest rates biggest ever, it's a catastrophe. Really, the announcement is over. People can put it past them. They don't have to worry about it for 2 months, and the market just releases a bunch of stress, just releases a bunch of steam, and it starts going up. So those last 5-6 days, I'd definitely be very bullish. I'd be extremely cautious around the 22nd, 21st, 23rd. And again, it's usually a combination. So this alone might cause a small, downtick in prices, but the nuke is what everyone's talking about, as we've seen a lot of nukes lately. So it would have to be this in combination with some other just random one-off macro incident, which you can't really predict. I don't see any conferences on the schedule, but it could be anything, just any random one-off macro incident that happens. And if it coincides like a natural disaster, something like that would happen during this time, then you could expect a major nuke. This on its own, I would predict a small downtick in prices, not necessarily a nuke, but it's crypto, anything's possible. Let's move on. So just where we are with the bear market drop. So a lot of people are like, okay, we're at the bottom now. A lot of people, even more people are like, we have one more nuke. So that stems from this data here. So right now we're at 72% drawdown, decrease from 69,000 peak prices. And then a week ago, the max drawdown was 74%. When prices reached 17,600, that was at a 74% drop from the previous high. So how did this stack up to the latest bear markets? Well, almost there, but not quite. It's kind of in Never Land, kind of in looks like one more nuke available, but 2014, that was post Mt. Gox. That was an 83% drawdown from the max peak. 2018, that was an 85% drawdown. That was from 20,000 to prices reached about 2,950 at one point. So that was an 85% drop. And then right when the pandemic hit, when prices hit 3,800, that was at around an 81% drop. So during these bear market cycles, I guess the pandemic was more of a one-off thing, not quite the same. 2018, 2014 is shaping up to be very similar. Those at 83, 85%. Currently, this bear market, the max drawdown was 74%. So if we're lucky, it might just kind of stay here and not have another nuke event. Then we'll slowly start creeping up. Probably, if it goes in line with past cycles, that would mean one more nuke event. And then an 80% drawdown would be prices hit 13,800. So that's just the price point to watch for approximately if there's one more event where a bunch of different macro events happen at once that cause a nuke. But it's not guaranteed that would happen. In summertime, prices aren't that volatile to begin with. So we might get through this bear market with this being approximately the bottom and we don't have another nuke. Who knows? Let's go on to Maren Altman's weekly prediction here. Get this up.
Mercury opposite Bitcoin's Pluto on the 5th looks really challenging. Mercury opposite Bitcoin's Mars on the 7th looks challenging. Mars square Bitcoin's Mercury on the 9th looks,
So there we go. So she is predicting Tuesday, slightly bearish. Thursday, slightly bearish. Saturday, major caution. Could be majorly bearish. And I'm kind of just predicting sort of flat action this week, I think. Who knows? We shall see. Let's move on to the poll of the day. Today's poll of the day. What is the most overused tweet of the bear market? Don't try to time the bottom. Remember to dollar cost average, DCA. Just hodl, or millionaires will be made. So far, 20 votes. Just hodl is winning with 40% of the votes. Somebody else wrote, remember to buy the dip. You should have included that. I agree. That's another good option there. But yeah, these are the tweets you sort of see a lot in the bear market there. If I could pick one, I don't know, probably the just hodl or always DCA. See that one a lot. Remember, Doc? Yeah, we've been seeing that forever. We don't need any more of that right there. Yesterday's poll of the day was a good one. So now the 3 Arrows Capital blow up just gets bigger and bigger every day with, so many more partner companies that lent them becoming insolvent because of their fund blowing up. It's become quite apparent that 3 Arrows Capital is one of the single biggest hedge fund blowups in history, crypto or mainstream hedge funds. So how does 3 Arrows Capital rank amongst the other great, spectacular hedge fund blowups? The choices are 3 Arrows Capital, Long-Term Capital Management. That was Equities Currencies in 1998, Barings Bank and their trader Nick Leeson, who brought them down in 1996. That was Currency Trading, and Amaranth Capital. They were commodities oil traders in the U.S. in 2006. So 3 Arrows Capital won, 50 votes total. They won with 62% of the vote. I would rank them probably in terms of the money lost, Three Arrows Capital, so they were at 10 million at the peak, presumably around November. So in less than a year, they went from 10 million to close to zero. Long-term capital management, they lost 3.5 billion in a few months. They had a lot of highly leveraged trades that were at 250 to 1 leverage ratio. So here you hear like 100 to 1 is a lot, way too risky. They're at 250 to 1. So when the spreads went against them, they got crushed. Barings Bank, that was a black swan event. This guy, Nick Leeson, he was the sole currency trader for this huge bank that employed 1,200 people. He bet way too large amounts. It was bullish on the Japanese yen, and then the big Kobe earthquake of 1995 overnight wiped out his entire position, lost $1.6 billion in a week there, put the entire bank out of business, put 1,200 people out of jobs. And then Amaranth Capital, they lost $3 billion in a week in 2006 and $6 billion on the year in 2006. They just had bet way too large amounts in oil futures. They were betting that oil prices would go down. They miscalculated that oil prices that year and the year after would just keep going up. So they lost $6 billion on the year in 2006. So in terms of total dollar amount, Three Arrows Capital is the highest. It wasn't quite as quick as Amaranth or Barings Bank, but it was almost or pretty much the largest dollar amount, start to finish. So some more articles are coming out. This is just not looking too good for the founders here. So this is their 2020 fiscal year end statement. This is their annual report. Fiscal year in 2020. So this was before they were that big. I guess it looks like the run-up in 2021 was where they really shot up their assets to $10 billion. So for fiscal year 2020, they reported $2.36 million USD in total assets, $830,000 in profit for the year. So small fund, the numbers seem fine. Then listen to this. Then the equivalent of $5 million USD was paid out in dividends to the two founders, Zhu and Davies. So, $2.36 million in total assets, but they pay a $5 million dividend to the two founders. That's just not really the stuff you want to be hearing when all this goes down. And it doesn't, more bad news for them. So Singapore, that is where their fund is registered, and the owners kind of split their time between Singapore and Dubai. So they're looking into them. So this kind of falls into the category, sort of loosely applied rules that weren't really enforced when things are going well, but then after the fact, when there's an implosion, this is absolutely the stuff that authorities are going to be looking at. Because when so much money's lost, they need to get you for something, and there was a lot of misappropriation of money. So I guess they were registered as a hedge fund in Singapore. They were only registered to manage over $250 million max. So they started out with less than that, but then during the bull run of 2021, their assets swelled up to $10 billion, and they failed to re-register under the greater hedge fund AUM management laws. I guess there is a greater like that. They failed to re-register under those, and so the Singapore authorities are looking into that. Also, that they used too much leverage, which we all know, but I guess in Singapore, when you register a hedge fund, you have to kind of describe what your investments are going to be and the specific amounts of leverage you plan on using in your investment methodology. Whatever they told Singapore authorities they were going to be using the amount of leverage, they vastly exceeded that, which we all pretty much know is a fact. So they're looking into that. Let's move on here. So altcoins, as I've said, I'm bullish on altcoins now. They're at the bottom of the market. You always have to look at the future, and if the price is going to be up in the whole market in 3 to 6 months, then altcoins are going to be really up in 3 to 6 months, even the altcoins that are not yet on exchanges. But so like this, I saw this tweet here. I'm always looking for the next altcoin ecosystem that's going to boom. I've been bullish on earnings ecosystems. I did a little deep dive into hotels. It's a hospitality earnings sector coin. So STEPN, move to earn, as I've been telling people, it's kind of already peaked. Probably not a good investment. This person tweeted, I put $11,000 in STEPN's move to earn last month. Now it's down 95%. I need to run 11 kilometers every day for a year just to break even. So yeah, I think a lot of people just got into STEPN because they were hearing the reports. You can make $300 to $400 for running, and most people, they have to pay to go to a gym. So if you can not only not have to pay, but make all that money, and it's something you'd be doing anyway running, why not just do that? But as people are, so sort of the mania, the excitement over that. But as people started using the game and they started figuring out it was harder and harder, and there were a lot of price fluctuations with the in-app token, GST, that made it harder, and it was expensive to buy the NFT sneakers to wear, and they needed to run more than they're in shape for. People are just finding that move to earn is tough. It's a tough business to be in. But, like shops, I covered this coin here, Drip2, about a month ago. They're a shop to earn ecosystem. That's one of the earnings ecosystems, which could be the next one. There could be a bunch of earnings ecosystems that are going to boom. But yeah, they're just little tweets here. They put up a tweet that somebody invested around $13,000 in Drip2 token. They're a very small cap coin. So the fact anyone at all bought $13,000 worth of Drip2 tokens, that's pretty big right there, especially in this bear market. And in the days before that, there was a separate purchase for, I think, around $6,000. So these are the little things I think about that a lot of people are, looking towards the next altcoin earning ecosystem. So yeah, I did the deep dive on D Hotels last week, and then tomorrow we'll be doing a deep dive on one of their partner ecosystem companies, Encircled Official. They're not specifically an earnings coin, but they are an altcoin at the same stage as D Hotels. The two projects are partners with each other. It's an ecosystem that I like, so be on the lookout for that deep dive tomorrow. I'm excited to be doing that. Let's move on here. So let's move on to the cover story here. So not like the cover story, just the main story. So Bloomberg put out this good article. So the Bitfinex hackers, we've been hearing a lot about them the last few months. Everyone kind of knows the story. No one really found out exactly how they got caught or any of the details around there. Bloomberg put out this very good article. So I guess what happened was, the authorities initially got on the trail because they had purchased some things on Alphabet, the darknet website, in 2017, and they were able to connect their account on Alphabet and some of the purchases they had made to their names. So they just got on their trail by good detective work, just grassroots detective work there. But what's interesting, then, as we know, a few months ago, they got a subpoena to look at their iPhone, their iCloud storage account. A lot of people were kind of wondering, where did that come from? How did they know to look there? They were presumably looking for a password to the account that had the $4 billion in coins, but how did they know to look there? So this article went over it. I guess what happened is when they raided their place in January, and they were, I guess, looking for phones, computers, passwords to seize, that sort of stuff, they presumably didn't find too much interest in that raid, but I guess in the middle of the raid, the couple here, Dutch is his name, Razel Khan is her rapper name, I guess they started talking in Russian with each other, which kind of set off the authorities' sort of alarm bells. Why don't they just talk in English? And then one of them, the girl Heather, said after their conversation in Russian, okay, we want to take a walk, we want to bring our cat out. So can we do that? Authorities said, sure. But then the girl, I guess, went underneath the bed and pretended to look for the cat. Really, she grabbed a phone, tried to apparently hit the hard reset button on the phone. And then the detectives raiding the place saw that. And then he yanked the phone out of her hand. Now, presumably, the article indicates she was successful in doing the hard reset on the phone. So they were not able to break into that phone, but just the fact that she was clearly trying to delete something on that phone was a clue that there's something on that phone that set off the authorities' alarm bells there, rightfully so. And so they said, okay, well, we can't get into this phone, so maybe she has some passwords stored in the cloud, so let's get a subpoena for their iPhone cloud account, which they did, and that is where they hit the jackpot. They got the passwords right in the cloud, because that means in the cloud means it was the passwords were probably saved on the phone at some point, but that gets automatically uploaded to the cloud. And so, yeah, in their phone and in the cloud is the password to multiple of the wallets, totaling about $4 billion of the money. So they just hit the jackpot, probably to the surprise of even them, the authorities, that all the passwords were in there. But yeah, they got the jackpot there. So yeah, it was just a fatal mistake. She should not have been trying to do that divergence tactic, the cat thing. Because they probably wouldn't, if she hadn't been trying to grab that phone, they probably would have had absolutely no idea that there was something on that phone. Then they wouldn't have even gotten the subpoena for the iCloud storage account. So it was that one small mistake, sort of like a scene from a movie right there, that ended up getting them caught. And then there was another interesting part here. So I guess $70 million from the hack has still not been recovered. They don't know where that is. the authorities were able to trace part of the hacked funds to the Russian darknet marketplace, Hydra. So that's different from Alphabet, which I think was an American marketplace. Hydra was the Russian one. So they traced a lot of the funds there. What they think is some of the more popular posts on that. It was a drug marketplace, but also I guess you could there were vendors you could send crypto to, and then they would physically bury cash for that amount in places in Russia and then give you GPS coordinates as to where the cash was buried. That's a real thing. Yeah, Alphabet and the other darknet markets, I guess, didn't have that. Hydra, they took the technology to the next level, so you could physically have cash. You could do an exchange, crypto to cash, and physically have the cash buried, and then they give you the GPS coordinates, you go and bury it. So apparently they think there might be a lot of money just buried around Russia, and the GPS coordinates are somewhere. I guess they were doing that as to sort of just leave some money in trails for at some point if they were in Russia, if they had to flee the country, or maybe when they get out of jail, stuff like that. Just again, like a scene from a movie there. I mean, who would have thought that technology's around? But yeah, that's where they think probably the rest of the 70 million is, or at least they sent it there, and they were going to have some of it buried. It's tough to say is 70 million of it buried or just some of it, but it does seem to indicate that was the intention for part of the missing money. So just a wild story there. That's it for today. I'll be back tomorrow with a new episode. I'll be doing the Encircled Altcoin special, the partner ecosystem coin, the hotels. Hope you enjoyed this episode. Don't forget to follow me on Twitter @BenCryptoShow. Hit the like and subscribe button here on YouTube, and I will see you tomorrow. Later.